Taran, hello guys. So today is the 7th of the 30 days trading challenge and making money with AI. And today we are going to be looking at fundamental analysis. So in forex trading, there's something called fundamental analysis. And what that is basically using economic, financial, and geopolitical factors to analyze price movements so as to make your trading decision. So basically that's what it is. But if you don't understand what I just say, calm down. I'm going to further explain, right? So I say it's using economic, geopolitical, and financial factors to determine the price of the currency pair that you are interested in. So when we talk about economic factors, we are looking at things like GDP, right? So gross domestic product of a nation. So the higher the gross domestic product, that means the country is actually booming. What it means is that the pair of interest, right, is going to, go higher, right? Then we look at interest rate. The more the interest rate, that means it's going to serve as an incentive for people, investors, to put in funds into investing in government bonds, shares, and all, which in turn is going to increase the strength of the currency pair, in turn making it to go higher. Then things like unemployment and geopolitical factor, maybe things like war, uncertainty, rest, insurgency, and the rest. So in this video, we are going to be looking at um, how to analyze those information, how that information is very, very important to making our trading decisions. So we look at the type of fundamentals analysis that is out there, and also we look at the chart and have like a very, very hands-on practical approach to analyzing fundamentals, so that when you are trading, you know that, okay, based on what is happening in the world right now, this is how it's going to affect the dollar, or this is how it's going to affect euro. Probably like the war that is happening, the Ukraine Russian war, how it's affecting the euro, you're able to know. So without wasting much of our time, let's go into today's video.
Okay, fam. So to give you us a better context of how fundamental analysis can be used to determine trade, I'm going to open my chart so that I'll just show you. So I'm going to use, for this illustration, I'm going to use the XY. So if you don't know what the XY is simply dollar index. And to do it, let me remove it. To do it right, you can, let me delete it. To add it, or just come to your quote, then type DXY. So it's already added, right? So it's called dollar index. So basically dollar index is just the strength of dollar, is the graphical representation of dollar, of how it's doing per time. So what I'm going to do is I'm going to go to the monthly chart so that I will show you something. Now, I told us that fundamental analysis is basically using geopolitical, financial, and economic and economic factors to determine trade, right? So let's use economic factor. Like, so when we talk about economic factors, so the indicators that we're looking at is things like GDP. So if you don't know what GDP is gross domestic product, right? And it's basically the sum total of all the goods and services produced within a country, right, in a particular year. So that's the GDP. Then, so this is the thing. So what it means is that the higher the GDP of a country, now the better the country is doing. That means the country is favoring investors and also like local production, thus improving like the strength, right? So that's what it means. So now what it means is that then the opposite happens if a country has like a low GDP, right, like Nigeria. So now look at what it means, right? So that's one. Then the other thing is inflation. So if you don't know what inflation is just the increase in price of goods and services over a period of time. And what that means is that now the more prices, the unit price of goods and commodity increase over time, that means the purchasing power of that currency is going to be reduced. So for instance, if you are using one before, with 10 naira you can buy biscuits, but right now one biscuit costs like 250 naira. I don't even think there's biscuit for 50 naira anymore. So it's because of inflation, that's why. So the more the inflation, like the weaker the currency, right, then the country with less inflation rate has better, currency strength. So basically those are the things. So for economic indicators, you have like GDP, we have inflation, we have unemployment rate. So basically that is self-explanatory. Now for a country that has high unemployment rate, it means that the country is actually suffering, right? So unemployment rate is the ratio of people, or the ratio of individuals within a country that are employable, but then there are no jobs for them. So that's the unemployment rate. So the higher the unemployment rate, the weaker the economy, right? So now let me use other factor like geopolitical factor. So geopolitical factor like war, like hazard, like natural disasters, and uncertainty, unrest. So you know what happened in Nigeria during like the war, right? During, because of the insurgency, people no longer want to come and invest in Nigeria, unlike before. So now let's use another very very relatable term. So let's use United States dollar, because United States dollars is world reserve, right? So now if I say 2020, what comes to mind? So let me see. So 2020, right? So here, so if you see our chart, so this is July, right? This is 1st July 2019. Now you remember COVID-19, so that's like one of the biggest pandemic that hit the world. And look at what was happening. The dollar was bullish, so around here, right? Around here. So let me increase it here, around here. But because of the, you remember when, look at this time here, around January, so COVID-19, when people were so unsure about, about how it was going to impact, so immediately they announced the lockdown. You see, people started selling their dollar because they are looking for ways to, survive, right? And the safe haven for most people is actually buying gold. So that's how you see that here in 2019, dollar just went down, pia, like it went down. It kept tanking, it kept going down just because of like the COVID-19. So you see, that's how dollar kept going down until say 2020, 2021. So like if you see November 2020, when like the heat of this thing, and they made some reliefs, right, where people can now start buying or selling stuffs, and stores in United States start opening, right, so that people can get this thing, there's transaction. You see that the economy started picking up and still picking up than it had in 2022. So basically that's how it can affect, it can affect geopolitical events, or geopolitical events like natural disaster, unrest, even Ukraine war, right, like can affect, the currency pair. Okay, now let's look at Euro USD. So let's use the Ukraine war. So Euro USD GBP. So let's add Euro to our quote. So we'll go to quote Euro USD. Okay, I think it's in our quote already. Euro GBP. Okay, USD Canadian dollars. Okay, so this is it. Now you remember when during the attack, so geopolitical. So let's open Euro USD. Let's open the chart and let me show you something. So here let's open the monthly time frame, and you see like the ratio of it to dollar, right? So because of the unrest, now so in July 2018 everything was going fine. But look at, you remember when, if you go to Google and type when did Russia launch attack on Ukraine, you see. So you remember that it was in 2022 that Zelensky was literally everywhere, soliciting for help, and there was war everywhere, right? So that was in 2021. So that was when the whole thing started hitting up, and you see how euro tanked, right? So people lost interest. And another thing that happened is that now, because of Russia is like one of the um major supplier of oil, crude oil, to like the whole Euro, like Scotland and the rest, right? Norway and the rest. But then, because they're no longer supplying oil and there were sanctions, you saw that, the economic um so the economic strength of euro started declining, right? So that's why you saw this rapid de- decrease, right? Decline in the euro. So understanding news. So as a trader, one of the things that you have to do is that you have to be very, very conversant, like with the news. Now, Bloomberg should be your friend, and also there are tools that you also use, right? As a trader. So things like an forex calendar or forex factory, that's what you use to know like what is happening like in the financial